Good morning, fellow traders from each and every part that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global assets. Today, before we dive in to look at the opportunities in the financial markets, it is important to note that yesterday we had a major news being printed, which we know is going to affect movement of asset in the classification of asset classes. I'm speaking about currencies, I'm speaking about commodities, I'm speaking about stocks, individual stocks, and also group of stocks, among other variables. And which data is this? Remember, the day before yesterday we had PPI. Then yesterday we had CPI. But before we dive into the nitty-gritties of the same, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video. So to mean you can find it on our YouTube channel at HFM Kenya. Like, subscribe, and click on the notification button so that you're not left out in future content as we attempt to fill the educational gap. With that out of the way, let's discuss core business of today, which is CPI. CPI numbers came out soft, and it is important to note that inflation rate year on year, which you could see right here, consumer price index year on year came out at 2.9% from what was anticipated or consensus at 2.9%. So we see quite soft numbers there, with the actual printing from what was anticipated. On the flip side, not so far away from that, we have consumer price index, X food and energy, to mean without looking at the indication of the price of food and energy, which came out at 3.2%, which is slightly higher than the anticipated 3.3%. So generally, we could call it out to be the CPI came out as soft numbers. So the inflation in the United States seems to be cooling as we await the inauguration of the new president, Donald Trump. But before we make any pre-assumptions, it's good we go to the charts, then see the charts play out in reflection of this. Good. So here we have begin with currency, so Euro USD. We see a retracement. Remember, the numbers which came out soft and slightly below would have one major effect. Would see retracement from USD pairs, and beginning with the US dollar quote currencies, we see retracement trying to challenge the long-term trend that we have been having, the long-term downtrend, and right now we are experiencing a retracement because of the soft numbers. Right? Remember, all this is to be overseen by the central bank so that they could adjust monetary policy through interest rates, so as to fit favorable economic module. But all we need to know right now is that the soft numbers will give us some sense of retracement. So this is Euro USD. If we go to a lower time frame to see what we mean, we see that price is now printing to the upside from the day before yesterday's PPI. This arrow was indicating the retracement. Let's push it up. We see price is now retracing to the upside, and this in market structure would call it a change of character. The long-term downtrend is now appearing to change its direction from a downtrend to an uptrend, forming higher highs and lower highs. We want to see the highs to be taken out, and you could see price reacted from the 1.03550. We want to see price now printed to the upside, challenging this area of interest again, and possibly closing above, as we monitor other economic data coming out with our lens and focus on the Fed's reaction to the cooling inflation. Having that in mind, it's the same scenario we are going to see in GBP USD. We see the highs being taken out. We want to see more highs to be taken out to reflect the expectations of the fundamental analysis. I'll draw in another key level right here, where we're going to monitor price from. We want to see price taking out the highs, and to see clearly, I would go even to a much more lower time frame, like the 1 hour, right? We want to see price coming and taking out this high and coming to challenge, to test the key level here at 1.23270. Unlike this scenario, also we are going to see in AUXI printing price quite aggressively. We see now price was in a long-term trend. We could see that from the from the daily time frame. If we go to the 1 hour time frame, we see now price is retracing, reflecting the soft numbers which were printed by CPI. We want to see price closing, taking out the highs, and at the time of this recording, to be able to adjust this area of interest here, we see that price broke above this area, now retested it, and now price is printing to the upside. Now, we have time without numbers say that we retail traders and investors would like to follow the trend with the famous dogma of the trend is your friend. So, knowing that there is a change of character from a downtrend to an uptrend, we shift from looking for for sales to now looking for buys as we monitor market structure, price forming higher highs and lower highs, taking out the highs. I would be tempted to go to a lower time frame to see clearly. Actually, we see from the 15 minutes time frame, from this 1 hour support, price just reacted. We see the candlestick language here. Candles printing with a long wick from the area of interest, printing price to the upwards, and would like to see it come and take out this high. Come and take out this high as price continue printing to the downside. Remember, guys, anyone who got this trade from this 1 hour support right here, possibly is having a good time, because the retracement to this support and price printing to the upside would be considered as what we call a sniper entry from the retracement to get a favorable risk to reward. For USD CHF, beginning from the daily, now we go to USD base currency, so the USD coming in fast. We see from the daily time frame, we have a slight retracement to the downside, attempting to take out the lows. If we go to the 1 hour to see what would that mean, we see that price is now changing its character from an uptrend to a downtrend. Why? Because of the soft numbers. Now we want to see the lows being taken out to reflect this expectation of the printed economic data. USD CAD, we are likely to see the same, again beginning from a daily time frame. We are still in the consolidation, but from the daily time frame we see we have bearish candles. Yesterday closed with a bearish candle. If we go to the 1 hour, we see that we are in a downtrend, and the lows are being taken out to support that particular narrative. For gold, as we are experiencing the transition which is happening in the United States, we see a lot of conversations around bringing peace and coexistence in war fronts. And we know I have specifically introduced this subject at this point of the daily morning market call to remind us that commodities, where we see this gold and precious metals and gas, is largely affected by geopolitical activities. And when we have tension and when we have fear, we know that fear inflicted into the market, investors and traders would not like that. So people would come to gold to use it as a safe haven to store their wealth. Now, having that in mind, back to what I was saying, in the transition that we're experiencing in the United States, with the incoming Donald Trump to be sworn in on 20th, that is next week on Monday, during Martin Luther holiday, we see a lot of conversations on all fronts to cool the tension, right? So if the tension is cooling, we would want to shift our focus to what moves commodities with focus on gold here to fundamental analysis. And we know that the soft numbers would make gold to continue going in an uptrend. If I go to a lower time frame, we would see clearly yesterday we were in an uptrend because of the softening US data on CPI printed. Stocks, on the other side, would have a good day with indices printing price to the upside also. And as we walk into that, I would like to bring it to your attention that this, by any chance, is not financial advice. This is meant for purely educational purposes. Kindly do your due diligence and remember to observe risk management. And in the attempt of bridging your educational gap on the financial markets, kindly visit hfm.com, our website at hfm.com. Attempt to register for an account, and you'll have one of our experts contact you to guide you through the process as you venture into the financial markets. Until tomorrow, the same place, the same time, as we anticipate the Fed's reaction from the cooling inflation. Take care and God bless. Thank you.